Today I'll be showing you guys an extremely easy option strategy that you can do on a stock that you think is going to rise or fall. Preferably, in this situation, you want the stock to rise because that's where most of the profit is going to come from with the option strategy that I show you. But if the stock does drop, then you'll get money that way too. So as long as the stock doesn't stay stagnant and trade flat, then you'll make money on both sides. For this example, I'm going to show you guys on Dallas. If we look at the simple view, let's look at the week and past months. Obviously, we can see that Delta Airlines, I think I just called it Dallas. So for this example, I'll be showing you guys on Delta Airlines. So if we come over here and we can look at the past month, obviously here we can see that Delta Airlines just keeps on dropping. So let's say either as long as it keeps dropping, we'll make money, or if it goes up, we will make money. Preferably, we want it to go up because that's where we make the more money. But like I said, as long as it doesn't trade flat, then we should be good. Before trading options, I would make sure that you understand how to exit them if you have to for whatever reason, and understand the risks associated with this one. We don't have to worry about early assignment because we aren't selling anything in the strategy. All you're doing is buying pieces. And I would also take into account the commission, if there's any commission fees with trading options, because that will run you up a couple bits of money because there are 3 pieces to this option strategy. But on Robinhood right here, there are no commissioner fees, so we don't have to worry about that part. So for this example, we're going to come over here to Delta Airlines, and our first piece is we're going to buy a put in the money. So we're just going to get as close to the share price as we possibly can. At $29.79 right now, $30 is our closest price. So we're going to buy a put right there. Next piece is we're going to buy a call in the money again at the same spots. So we're going to buy it right there as well. And so you come right here and you see long straddle. And this is actually a strategy as well when trading options that you can see right here. And you'll make money both ways. But you can see the, let's say Delta Airlines dropped 7%. You're going to make about $100. Let's say it rose about 7%. And you're going to make, you're make about 55. So when it runs in this way, it's equal on both sides. So to limit this, we're going to add one more piece to it, and we're just going to buy another call. So if you come over here, click this drop down arrow, click on custom to change the ratios, and right here we have one of each. So find the one that says call, and we're going to just switch this to 2 calls. So now you can see that this will switch to custom if you did it properly, and now you can see it skews it a little bit differently. So you can see when it goes left, it flattens out a little bit more, and when it goes right, it's way more of an increase. And you can see the profits that you'll gain right here. But let's take into account where our expiration date is. So this is expiring on July 8th, and I'm recording this on July 5th. So there's not much really time for Delta Airlines to rise that much because it needs to hit at least $30.97 in just a couple of days. But then we're gonna start to crank into the profits. If you think it's going to rise that much, then that's great. I think we should give ourselves a little bit more time to let that move though. So we're going to switch this. That's just one method of it. And we're just going to switch this, and you guys can see the little bit of a difference as to how the extra week of the expiration date changes things. So we're going to go to buy, put, same spot. And you're going to see it's more expensive. If you want to compare the prices, just scroll back a little bit in the video and you can see the difference of prices. And so we bought a put at the $30 strike price. We're going to buy a call at the same spot. Come over here, click this arrow, click custom, change the call to 2, and then there we go. So now the max profit is also increased and the max loss is also increased. So if you remember when I was skewing this around over here, we're making like $60, $70 in about this range, and now we're making $200, $300, $400, $500. So if you think in 10 days that Delta Airlines can hit $33, and you were correct, you're up about $200. But you can see also your max loss is capped off right here at the $30 price conveniently, because that's where we set our ranges at, and it's going to run you about $405 to put this into place. So definitely not a very cheap strategy. You're going to see with different prices of the stocks, if you look on the top left, that being about $30 and the expiration date being 10 days away. That's the general idea of where the cost is going to be. If you find a cheaper stock, the number will change drastically. You can get it down to about $100 or even less. And if you move the expiration date up, that'll make the price cheaper as well. But you want to take into account that you get time for the stock to actually get there. So next thing we're going to do, we're going to come over here to option strat. Alright, so now that we're in option strat, we're going to come over here to build, and we're going to come over here to strap. and that is what this strategy is called. This is a strap strategy. So all we're going to do is copy this trade right here into option strat. So we're just going to copy these pieces in there. So first things first, we're going to choose our ticker symbol. We chose Delta Airlines. Make sure the correct expiration date is chosen. This is the 15th, so we got 10 days till it expires. And then we're going to buy our put first, which is just 1. So actually, I think it has it set up for us. Yeah, at the 30s. So this has it set up for us already, actually, just by default. So we're going to move this chart range a little bit so we can see where the stock has to be at. And with option strat, you can see, if you compare it to Robinhood, this just shows you a little visual at the expiration time, which is whenever market closes on your expiration date. So there's not much to really visualize during the earlier days. But over here, obviously, we can see where the price will be and what our profits will be at the time of each day. So I think that this helps visualize it a lot better. We can also play around with the implied volatility if we want to worry about that, but it's not as important considering we aren't selling anything. We're only buying pieces. So yeah, if you enjoy different option strategies, be sure to check out my channel for more videos like this one. And if you have any questions, be sure to comment them down below. And yeah, thank you for watching.